Hey there. I'm going to show you a little trick today about how you can use a 1-to-1 reward to risk ratio, but get a 2-to-1 reward out of the trade. We're going to use the stop loss in the same place. We're going to keep the take profit in the same place as we would generally with the 1-to-1, but instead we're going to get 2 times the profit out of the same trade. That's a little trick, and it's awesome. The idea is to make more than you lose, and when you are trading with a 2-to-1 reward to risk, that is essentially what you're going to be doing time and time again. Now, the way the market moves a lot of the time, the 1-to-1 is the safest way to go. You're more likely to get a 1-to-1 target hit than a 2-to-1. So what we're going to use is the 1-to-1 parameters, but get a 2-to-1 profit out of it. I'll show you exactly how this works. Now I've got a couple of moving averages on the chart. Very straightforward, very simple. We're looking for moving averages to be in a direction. In this case, it's down. Quick moving average is below the slow moving average. We need for the price to pull into the moving averages, either above or into that space, and then close back into the direction of the trend. We got that here. This becomes our entry. When you enter the market, we'd generally be entering on the close of the candle. That is perfectly fine. That is the safest way to go. Close of the candle, our stop loss will go just above the most recent swing high, be something like this. And then our take profit would be 1-to-1. So we're looking at about that. All right. Stop loss, entry, take profit. Very straightforward. Most of the time we're going to get our take profit hit. But what we want is to get a 2-to-1 ratio out of this. So what we're going to do is not enter on the close of the candle, but instead we're going to wait for a 30% pullback. And I'm going to use my Fibonacci tool to delineate this. Now I'm going to get rid of these levels just so that I don't have too many lines on the chart. But first, this is my Fibonacci tool here. I'm going to start where my take profit would go, and I'm going to draw it down to where the entry level would generally be, and we can see we've got these levels here. I'm going to shoot them off to the side just by stretching it out. So we've got these levels. Now, if you're going to use this technique, the Fibonacci retracement tool is really a nice tool. So what I'm going to do is go one step further and develop this Fibonacci retracement tool to give you a little more information. So first of all, what I want to do is, again, start at where my stop loss would be, go to where my potential 1-to-1 entry would be at the close of the candle. I'm going to then select the Fibonacci tool, right click on the angled line, Fibbo properties. I've gotten rid of the extraneous. So what I've got here is the 0 level, the 38.2 level, the 50, the 61, and the 1 level. I'm going to add one more level here. I got rid of all the other ones. I'm going to add a -1 level. I'm going to call it target. Okay. So we'll see how this goes. So this is the 1-to-1 target here. This is your entry. This is your stop. This is your 1-to-1. Now we're not going to enter at the entry, but this is ideally what starts the whole process. So again, what I'm going to do now is I'm going to add prices to this, because you see there's no prices here. We don't know exactly what the pullback will be. We'd have to draw lines and then see exactly where they are. That's too much work for me. So I'm going to, again, double click Fibbo properties, and behind each level under the description, I'm going to add a bracket, a %, and a $sign. So if I hit OK, we're going to see at the 0 level, which is the entry, how it adds the price. Now you don't need the brackets, just the %, $sign is what's important. I like to use the brackets because it differentiates it from the level. All right, so if I go back, I can add that to all the different prices. So I've added this to all the different levels in the description, and then I'll click OK. So now we've got our level and we've got the price, even with the target here. So we have now, just kill this and start all over again. We've got our entry. This is where the candle closes. This would determine, yes, the trade is on. We're going to look for a trade. Our stop loss goes above the swing high, and our take profit's a 1-to-1. My Fibonacci tool goes where the take profit starts, down to the entry level, This will give me my 1-to-1 level so that I know my target becomes 90.42. My stop loss is 90.90. This is where the close of the candle happens, 90.63. But instead of getting into the trade at that point, just going to pull this over so that the price is a little more visible. I'm waiting for the market to pull back up to the 38.2 level. And that price is 90.754. So I'm waiting for the price to pull back to that level. I can place an entry order, or I can just sit here and watch it and wait and then place a market order when it gets to that level. Once it gets to that level, I'm in the trade. I'm in a buy trade. Stop loss still goes in the same place. My stop loss becomes approximately 15 pips, right? Because this is where the pullback happened, and this is where I'm getting in the trade. And that makes my take profit now 34 pips. And it's just over 1-to-1. Just a little bit over, because it's not exactly 33 1/3%. So we've taken our 1-to-1 and we've turned it into a 2-to-1. We've reduced the risk on the trade, but magnified or amplified the profit on the trade. Now, there's pros and cons to this. The pros should be obvious. You've got a small risk and you've got a big reward. And you can lose 60% of the time, more. You can lose 66% of the time and still break even. So if you've got a fairly decent system and you're winning half of the time, you're going to make money doing this. Now, the cons to this is you're not going to get every trade. What's going to happen is you are going to find signals that do occur. You're going to get a trade signal, but you don't get the pullback far enough in order to trigger a trade. That is sort of the trade-off. And I think it's a good trade-off. I have no problem with that. We take a look at another example here. Price pulls below the moving averages. Now the moving averages are up. This is where the entry is. That candle closes. I'm going to go through the motions here. Now this is one that we don't get. The price never does get to our target, but I'm just showing you the example. Price does, however, trigger the trade. So we get the market moving in the right direction. Trade has been triggered as it pulled back to that 38.2 level. Stop loss is down below. So we would be going for a 30 pip trade with a 13 pip stop loss. Now I can lose 2 of these and win 1. And because it's not exactly 33.3%, I'd still be ahead of the game. So this is a great way to take advantage of these pullbacks. Let's take a look at this one right here. We've got market pulls up, drops back down. Use my tool, stop loss will go above the swing high. This is where the potential entry would be. Perfect. Price pulls up to the 38.2 level. 91.25 is where I'd get in. Now that happened on the very next candle. The profit target down here, 90.907. Straightforward, very simple, very easy. This is a great way to turn a 1-to-1 into a 2-to-1 without making any major changes. I hope you enjoyed the video, and I hope you get to employ this and really take advantage of it. It's a simple trick, but it will change the whole account building methodology. If you are struggling making money, this is going to really make a difference for you. Thanks for watching.